friends, I am Narendra Verma once again with you. As you know very well that we are dealing with the chapter number 2 in accountancy, that is fundamentals of partnership for class 12 CBSE syllabus. So in the same series we are moving forward. Today we are going to discuss about the provisions related to interest on capital. Alright, sometimes the interest on capital is treated as charge against profit, or sometimes it is treated as appropriation of profit. So there are a few conditions regarding that. So let's have discussion about that. Later on we'll talk about calculation of opening capital. Okay, because in some questions the interest is supposed to be charged on the capital, but the closing capital is given. So with the help of other information you need to calculate first opening capital, and thereafter you can calculate interest on them. Alright, so very first let's start with the provisions. See, the case 1 is when partnership deed is silent about interest on capital. Means partnership deed is there between or among the partners, but there is no clause related to interest on capital in that. In that case, no interest on capital will be provided. Okay, similarly, if there exists no deed as well. Okay, we have already learnt about it. If there is absence of deed, means the deed means written agreement. Written agreement is not there between or among the partners, then no interest on capital will be provided. Now let's move on to another case. So the next case is when clause of interest on capital is in deed, means partners have deed, and clause of interest on capital is also there in the deed, right? Okay, but it is silent on its treatment, whether interest on capital is to be treated as charge on profit or appropriation of profit. If nothing is mentioned in the deed regarding that, only it is mentioned that partners are allowed to get interest on capital at so and so percentage, then in that case what happens? Always treated as appropriation of profit. Once again explain you, when deed exists and deed has clause as well, but it is silent about the treatment, whether it is to be treated as charge or appropriation. So it is supposed to be treated all the time appropriation in the absence of any specific information. Alright, but one thing I would like to mention here, that will be done only when the profit is available. Alright, so under this case we have 3 conditions. Okay, I just write down the 3 conditions over here. One condition, loss. Another condition, sufficient profit. And third condition, insufficient profit. Alright. So as it is written here, always treated as appropriation of profit. Okay. So when profit exists, only then interest on capital will be provided. And if there is loss, no interest on capital will be provided. Alright? Understood the point? Here, sufficient profit, no problem. Say for example, we have 50,000 as a profit, and if we have 2 partners and 2 of the partners in total are getting 49,000 or 50,000 as interest on capital, we will distribute. There is no problem because we have sufficient profit. Alright? Problem will happen when there is insufficient profit. Let's take the example that profit is 50,000 and interest on capital in total of both the partner is approaching up to 60,000. Now the question arises that whether they will get interest on capital or not. However, this question we have already tackled in the previous video when we are talking about profit and loss appropriation account in case of inadequate profit. Once again, I would like to mention it here. In case of insufficient profit, what will happen? The interest on capital will be paid to the partners, okay, up to the extent of profit available and in the ratio of interest on capital of each partner. Okay, I just explain you with example. Say for example, there are A and B partner, and they both are getting ratio 2:1, that is profit sharing ratio. Okay, and what happens, the profit is 50,000 and say for example they both are getting interest on capital equally 30,000 plus 30,000. Okay, so in total it is coming out 60,000. but we have insufficient profit, we have profit of 50,000. Now what to do? Now what happens, instead of distributing this 50,000 in this ratio, we distribute this 50,000 in this ratio. Okay, means in ratio of amount of interest on capital of the partners. Okay, so what will be the ratio here? 1:1. This 50,000 will be divided between the partners in 1:1 ratio, means equally. Means A will get 25,000 and B will also get 25,000. Got it? Okay, so in case of insufficient profit, we take this kind of step. When we attempt the proper question about it, you can understand it proper way. Now let's move on to another case. So the last case regarding this is when deed clearly mentions interest on capital to be treated as charge on profit. It has been clearly mentioned that interest on capital is to be treated as charge on profit, because if it does not mention clearly, then we will treat it as appropriation. But if it mentions clearly, then we'll have to treat it as charge on profit. In that case, what happens? Even in case of loss, interest on capital is provided and transferred to profit and loss account. All right, because then it becomes the item of profit and loss account, like interest on loan or like rent to partner or any other expenditure of the firm which is necessary to operate the business, like salaries of staff, electricity bill or telephone bill, etc. Understood? So in that case, that interest on capital will be debited to profit and loss account. Okay, and it will be provided even in case of loss. However, it increases the loss. It doesn't make much difference because it is a charge on profit. That is why we already treat it as appropriation until it is mentioned as a charge on profit. But when the question says that it is charge on profit, we will have to do this treatment. Okay. So without wasting much time, let's attempt one question on all the cases so that we can understand in better way that how the treatment is done actually. Okay, we'll pass journal entries and thereafter I'll tell you the treatment related to profit and loss appropriation account also. Okay, so you can see the question on your screen. I have written the question here. Let's read the question without wasting time. Reena and Tina are partners sharing profits and losses in the ratio of 2:3 with capitals of rupees 4 lakh and rupees 2 lakh respectively. Pass the necessary journal entries for interest on capital and distribution of profits loss for the year ended 31st March 2019 in each of the following alternative cases. Alright, so we need to pass here entry related to interest on capital as well as distribution of profit. Okay, now if partnership, case 1, if partnership deed is silent as to the interest on capital and the profit for the year is rupees 40,000. Okay, so what does it mean? Partnership deed is silent. Deed exists, but it is silent about the interest on capital. Means there is no point related to interest on capital mentioned in the deed. Then in that case, interest on capital is not allowed. All right. Okay, so here we will not pass entry related to interest on capital. I have explained you what is the reason behind it. Okay, but we will do the entry for distribution of profit. Okay, so very first we will transfer that profit to profit and loss appropriation account. So the entry will be profit and loss account debit to profit and loss appropriation account. And what is the amount of profit? 40,000 being profit transferred to profit and loss appropriation. Next entry, profit and loss appropriation account debit. See, because here no other item is given, so we consider that the whole profit is supposed to be distributed between the partners. So the next entry we are going to mention related to the distribution of profit. Okay, so to Reena's capital account or to Tina's capital account being profit transferred to capital accounts. Okay, now let's see what is the ratio of the profit. Profit sharing ratio is 2:3. Okay, so this 40,000 very first will be divided by 5. It comes out 8,000. Then it is multiplied with 2, and here multiplied with 3. 16,000 and 24,000. In total, it comes out 40,000. So these two entry will be done in case 1. All right. As I told you that no interest on capital will be provided. Why? Because in partnership deed nothing is mentioned like that. Okay, now let's move on to another case. So another case says that partnership deed provides for interest on capital at the rate of 6% per annum and loss for the year is 30,000. All right. So deed mentions, it's written here, provides for interest on capital, means deed mentions that partners will get interest on capital at the rate of 6% per annum. That's okay. And loss for the year is 30,000. Now this is the point I have already explained you. In case of loss, yes, obviously we are going to treat it as appropriation of profit, but only when the profit exists. Here there is no profit, there is loss. Okay, so in that case no interest on capital will be provided, and neither will pass the entry of profit to profit and loss appropriation account. Direct distribution of loss will be done in profit and loss account itself. All right, because no other further item is also there. So what entry will be passed? Have a look here. So the entry is Rena's capital account debit, Tina's capital account debit to profit and loss account. Okay, because it is loss, so their capitals will be debited. Okay, and be focused here. It is not profit and loss appropriation account, that is profit and loss account. Already I have explained you in earlier videos that profit and loss appropriation account is prepared only when the profit exists, and there is no profit, only the loss is there. And what is the amount of loss? We can see here 30,000. So this 30,000 is to be distributed between the partners. They need to bear that loss. 2:3, right? Okay. So both the partners will pass this entry under case 2. Only single entry will be passed. Okay. Now let's move on to case 3. What does the case 3 say? If partnership deed provides for interest on capital at the rate of 6% per annum, means deed exists and deed mentions that interest is to be provided at the rate of 6% per annum. All right then. And the profit for the year is 42,000. Here profit exists. All right. So whether this profit is sufficient or not, that we can come to know after calculating interest on capital. So in such case, very first go for calculating the interest on capital, and thereafter we will decide what entry will be passed and not. Okay. So let's move forward. Interest on capital for Reena. So what is Reena's capital? Reena's capital is 4 lakh. And what is the rate of interest? 6%. That is 24,000. And Tina's capital is 2 lakh. Rate of interest 6%. Then it comes out 12,000. Okay. So if we make the total of this, it comes out 36,000. And how much profit we have? We have 42,000. So it means that is the case of sufficient profit. Interest can be provided, no problem at all. Alright, then pass the entry. So in case 3, very first we'll make the entry for transferring the profit. So what will be the entry? Profit and loss account debit to profit and loss appropriation account. And what is the amount of profit? That is 42,000 being profit transferred to profit and loss appropriation account. Now let's make the entry for interest on capital. Interest on capital account debit to Reena's capital account and to Tina's capital account. What is the amount here? 24,000 and 12,000. Total is 36,000. Okay, so this interest on capital is to be transferred to profit and loss appropriation account as well. So we'll mark the another entry as well, being interest on capital due. This is the entry of making it due. Now we'll transfer that. So what will be the entry? Profit and loss appropriation account debit to interest on capital account. 36,000 being interest on capital transferred to profit and loss appropriation account. I've already told you that instead of passing these two entries, you can pass one single entry. And what will be the single entry? Profit and loss appropriation account debit to Rena's capital or to Tina's capital. Understood the point? So whether you can pass two entries or single entry. Okay, so after that one more entry we need to pass. So instead of passing these two entry, I just make it one. Now I'm just writing down the alternative entry of this. Okay, like this you can pass profit and loss appropriation account debit, okay, to Rena's capital, to Tina's capital being interest capital, transfer to profit and loss appropriation account. Alright, now profit and loss appropriation account debit to Rena's capital account and to Tina's capital being profit transferred to capital accounts. Now see, profit is being transferred. So we had profit of 42,000. Out of this we gave interest of 36,000. Now how much amount is left? 6,000. Alright. So this 6,000 is supposed to be distributed between the partners in their profit sharing ratio. So 6,000 divided by 5. So that will be the entry for transferring share of profit to partners capital account. Okay. So these three entry will be done in that case. Instead of passing this one entry, you can pass two entries. Already I have told you. Understood the point? Now let's move on to another case. So another case says, if partnership deed provides for interest on capital at the rate of 6% per annum and as a charge on profit, and profit for the year is rupees 40,000. So here it is clearly mentioned that it is going to be treated as charge on profit. Okay, so what treatment we are going to do? Just have a look. Case 4. So charge on profit. All right. So in that case, we will not transfer profit to profit and loss appropriation account first. We will pass the entry for interest on capital first. See, for making interest on capital due, we will pass the entry interest on capital account debit to Rena's capital to Tina's capital. Okay. Now you see the twist here, that in earlier case we passed that interest on capital to profit and loss appropriation account, but here we are passing it to profit and loss account. Why? Because it is a charge on profit. So now it becomes the item belonging to profit and loss account. That's why we are doing it. And here also we can pass one alternative entry instead of passing these two. Okay, here we can deduct interest on capital, or from this credit side as well we can deduct that. Then what is left? Profit and loss account debit to Rena's capital to Tina's capital. Okay, so or in the narration we can mention interest on capital transfer to profit and loss account. Understood? So thereafter whatever amount of profit is left, we will transfer that to appropriation account, and thereafter it will be distributed. How? I just show you. Very first I just make these two entry one. So this is the alternative entry. Okay, now what happens? We had how much amount of profit? 40,000. Out of 40,000 in profit and loss account we have distributed 36,000. How much is left? 4,000. So now only 4,000 will be transferred to profit and loss appropriation account. All right. Okay. Now this 4,000 will be distributed between the partners here in profit and loss appropriation account. So what will be the entry? Okay, so that will be the entry profit and loss appropriation account debit to Rena's capital to Tina's capital. Let's calculate the amount here out of 4,000. So 4,000 is supposed to be divided with 5. 1,600 and 2,400. Total is 4,000. Okay, so these entries will be done in case number 4. Instead of passing one entry, you can pass two entries here. I have already explained you. Now let's move on to case 5. So the case 5th says that if partnership deed provides for interest on capital at the rate of 6% per annum. So deed exists, it mentions about interest on capital clause as well, percentage as well, as a charge on profit again, and profit for the year is 4,000. We have already seen that the total of both interest on capital is 36,000. Alright. Okay. And here the profit amount is 4,000. So this is the case of insufficient profit or inadequate profit. So in that case, what is to be done? because it is a charge on profit. Okay, so when it is a charge on profit, very first we need to make entries for interest on capital. The same entry will be there, same amount, 24,000, 12,000 and 36,000. Okay, and it will be transferred into profit and loss account, right? Two entries will be done in the same case. Understood? Okay, instead of passing these two, we can pass one also. I have already explained you. We will delete interest on capital from here and here as well. Okay, then what will be left? Profit and loss account debit to Rena's capital or to Tina's capital. Okay, now we had 4,000 rupees of profit. 36,000 is the loss. Okay, because we have debited that. Okay, so we need to pay 36,000. Very first we will pay 4,000. Then the loss comes out 32,000. So now the loss exists of rupees 32,000. So loss is not transferred to profit and loss appropriation account. Loss is directly distributed in profit and loss account itself between the partners. So we will directly pass the entry related to loss. We will not transfer that amount to profit and loss appropriation account. How? I just show you. So that will be the entry, because loss will reduce their capital, that's why their capital have been debited over here. Okay, so this 32,000 needs to be divided by them. So very first we'll divide by 5. So that will be the share of loss. Rina will bear 12,800 and Tina will bear 19,200. Alright, profit and loss appropriation account will not be utilized here because loss will be directly distributed in profit and loss account itself. Okay, now let's move on to the last case of this question, that is case number 6. Let's read that. If partnership deed provides for interest on capital at the rate of 6% per annum as a charge on profit, and profit for the year is 36,000. 36,000 is the total interest and 36,000 is the total profit. Okay, so no profit will be transferred to profit and loss appropriation account. The entire profit will be utilized for interest on capital account. So in that case, what's gonna happen? Only these two entries will be passed. Okay, this is case 6. Very first we will make the entry for making the interest on capital amount due. Okay, and then we will transfer that to profit and loss account, and then there exists no loss, no profit, so nothing will be doing later on. Understood? Okay, but again I am reminding you, instead of passing these two entry, we can pass a single entry. And what is that single entry? I just mentioned there. So this is the alternative entry. You can pass that entry instead of passing these two. So this is all about this question. I hope you have understood all the provisions related to the calculation of interest on capital, whether it is charge on profit or appropriation of profit. Okay, whether the profit is sufficient or insufficient or the loss exists. So in that case we can do that. Okay, now this was the question related to the journal entries. If these points come in the preparation of profit and loss appropriation account, how we are going to tackle them, I am just going to show you through another question. You can see the question on your screen. So I have written the question here. Let's read the question. Jitendra and Dharmendra are partners. Jitendra's capital is rupees 2 lakh and Dharmendra's capital is rupees 1,40,000. Interest on capital is payable at the rate of 6% per annum. Dharmendra is entitled to get salary of rupees 6,000 per month. Profit for the current year before interest and salary to Dharmendra is rupees 1,60,000. Prepare profit and loss appropriation account. There are two conditions: when interest on capital is treated as charge on against profit, and another when interest on capital is treated as appropriation of profit. Okay, so let's attempt the first condition there. So very first we need to prepare profit and loss account in working mode. What is the amount of profit? 1,60,000. Jitendra's capital is 2 lakh. What is the rate of interest? 6%. That is 12,000. Okay. So Dharmendra's capital is what? 1,40,000 and 6% of that 8,400. Total comes out 20,400. Okay, so that is the total interest on capital for both the partners. Now rest of the profit will be transferred to profit and loss appropriation account. 1,39,600 to profit and loss appropriation account. Alright, So because it is a charge against profit, so its treatment is supposed to be done in profit and loss account before transferring the amount to profit and loss appropriation account. Okay, now this amount will be transferred and thereafter the treatment of salary and other things will be done there. Okay, so let's see. So the entry we have done there, that will be transferred here, 1,39,600 to Dharmendra's salary. So how much salary Dharmendra is getting? Dharmendra is getting 6,000 per month. Okay, so 6,000 multiply 12, 72,000. Now, if any other item was there, we would debit it here, but no item is there. Interest on capital already has been treated. Okay, so after deducting this, whatever amount is left, that will be divided between the partners. So let's see what is the amount. So now see, the profit sharing ratio, it is not given, and when the profit sharing ratio is not given, it is treated equally. Equally means 1 by 2, that is 33,800. So in this way, profit and loss appropriation account will be prepared. We can see here we transfer the profit and loss account balance here, and then we just did the entry related to salaries only, and thereafter we distributed the amount of profit between the partners. Alright, now let's attend the same question under the second case when it is treated as appropriation. So in that case, this entry will remain similar, and this profit and loss account, how much profit will you transfer directly? 1,60,000. Because interest on capital has not been distributed, it will be distributed here itself. So what was the amount of interest on capital for both? That is 12,000, that is 8,400, 20,400. Now rest of the profit will be distributed between them. That is 67,600 is coming out. We'll put that value here and we'll divide it by 2 because they both are sharing equally. So it will come out 33,800, 33,800. So this is the difference of presentation. Only the difference has come related to treatment of interest on capital. In first case, we treated it as charge against profit, and thereafter the balance transferred here, and here we are treating it as appropriation of profit. That's why the complete profit is mentioned here and the entry has been done here. Alright, we have been doing this case, but charge against profit is new for you. That's why I compared both the cases here. Okay, so this is all about this question. Now let's move on to the another portion of this session, that is related to calculation of opening capital.